So if you've been paying attention to the media in regards to the housing market, then you probably already know that foreclosures and Airbnb are going to absolutely crash the whole thing. And even if they don't, it doesn't really matter because corporate America is buying up everything, right? Not quite. Anyway, hi, I'm Nick with the Iannitti Group. I just want to break it down for you. I'm going to cover a couple myths and come at you with a real quick housing update for San Diego for the month of October. So looking at it, let's just start with the first one, right? Basically, foreclosures are increasing. Now, technically, it's not wrong. Foreclosures are increasing, right? Are they going to crash the market? Well, let's take a look at them. When you look at them right here, basically, okay, compared to the unicorn years when we had a foreclosure moratorium and no one could foreclose, are they up compared to that? Yes. Are foreclosures increasing? Yes, they are. When you look at the number of foreclosures compared to our historic average, you realize they are incredibly low. They are a non-factor. If anybody's telling you that foreclosures are going to be a factor in the housing market, realize you're talking to someone that doesn't know what they're talking about. Okay. Airbnbs are going to crash the housing market. I've been hearing this lately. We know that Airbnb is having a little bit of difficulty. I saw the CEO say that they were going to pivot and, you're probably going to rent a car from them now and some other stuff, right? There's been a lot of cities out there that basically said, kind of enough is enough. We noticed that New York City basically reduced their number of short-term rentals this year by 77%. But we also know that Arizona passed a law in 2016 that said no municipality can restrict the number of short-term rentals. So where does this come down? Well, a couple of things you have to realize, okay? First and foremost, just because an investor, realize these are all investors that have these properties, right? Just because an investor can't rent it short-term doesn't mean that they can't rent it long-term, right? Probably odds are very good that they could. The other thing is we need to realize that when we talk about, short-term listings being reduced, well, what does that mean? Is that a room in someone's home? Is that a space over somebody's garage? And if they're no longer able to do that, yes, it's going to be a loss of revenue for them, but are they going to sell their house? Probably not. Okay. Bottom line though, with about 3 months of inventory nationwide, even if more than half of Airbnbs came onto the market right now, it would probably be a good thing, right? We'd probably be in good shape. Don't just realize that the number of short-term rentals out there is nowhere near enough to crash the current real estate market. Okay. And then the last one, this is probably my favorite, right? Wall Street is buying up everything, right? If you don't get a home right now, you're going to be screwed. Okay. Well, when we look at this, right, we're talking about, Wall Street, we're talking about institutional investors, right? This is probably, 1,000 properties. I would say somewhere between 100 to 1,000 properties. Still, I'll lump you in there, right? But it's a little bit easier to look at the numbers when you look at it in the percentages, right? So this is a percentage of all sales, right? So when you add up all these percentages, it comes out to like 24%, which is probably about right. Right? About a quarter of all homes sold right now are sold to an investor. Okay. Keep in mind though that 80% of those investors are mom and pop investors that own less than 10 properties. Okay. So Wall Street's really only buying about 1% of the properties out there. So nothing incredibly dire. Okay. Okay. So looking at equity, I thought this was good news. Basically, over the past 5 years, FHFA just came out with a study. Basically said that we're up about 57% nationwide on average over the last 5 years. California up 47.8%. When we look at the 30-year average, right, jumps all the way up to 298 or so national average, but California holding strong there, almost 305%. So definitely we know lots of equity out there. 38.7% of all homes in the United States are owned free and clear with no mortgage. Of the homes that have mortgages, 30% of them have more than 50% equity. 21% of them have between 30 to 50% equity. Okay. All of this equity is really what's provided a lot of market stability in our pricing. We haven't seen a lot of people that have had to move. There are a lot of people out there that can move and actually simply just pay cash for the next transaction, which is kind of nice. This is something that just came out of NAR, and I thought I'd throw it in here because over 3/4 of all homes sold have no children under the age of 18, right? It's basically empty nesters that are dominating home sellers. I just thought that was really interesting. I hadn't seen that statistic before. When we talk about current home price appreciation, Nicole Friedman, Wall Street Journal, basically said, look, the recovery is nowhere, as long or as deep as actually expected. It's going to turn out to be a lot shorter and shallower. In fact, we've already regained all the gains that we had from our dip last year. Okay. So looking at the San Diego housing market here, Keep in mind that these are median numbers, so the true middle. They're all housing types combined, and it's for the entire county. Okay, everything above the line are our lagging indicators telling us where the market's been. Everything below the line are our leading indicators telling us where the market's going. Our sales price was up a little bit year over year. Our days on market was basically down. That means things are now selling faster again. Okay, sold price per square foot is up. Our month's worth of inventory is up, but just keep in mind we're still only at 3 months worth of inventory. Remember, we need 6 months of inventory for a healthy, balanced market. Active listings are basically up 16%. This is where we start to run into the trouble, right? New listings down 21%. Keep in mind, if you've been following along though, this number was over 30%. So the numbers coming down, we're seeing more listings starting to come back, which is good, right? Keep in mind, obviously, we probably have a little bit of seasonality happening right now in San Diego as we're coming into the holidays. But as soon as this number gets better, we'll see these other numbers improve as well. So that's about it. If you have questions about, hey, what do these numbers mean? What is my home worth? How much equity am I sitting on in my current home right now? I'm more than happy to answer any questions that you have. Just reach out, and that's it. Thanks so much for watching. Remember, who you choose to negotiate for you absolutely matters.